See, India's power trading business is opening up gradually. Currently, only about 5% of India's power generation is actually traded through exchanges, as against many of the developed countries, wherein about 30 to 40% of the generation of power capacity is traded through exchanges. Thankfully, the share of exchanges is now improving due to the availability of power, cost rationalization, and investment in the transmission infrastructures as well. IEX has close to 95% market share in this market and has become a prominent player here. Moreover, the company also recently introduced real-time market or RTM and long duration contracts, which actually put together are expected to expand the market share of exchanges to about 5 to 6% as against 4% currently. Now, investors like Fidelity, Monish Pabrai, Aquamarine Fund, MIT, and many other renowned global and domestic investors have recently invested in the company. And this really speaks a lot about the potential and the quality of its business as well. Now, CERC had earlier allowed the neighboring countries such as Bhutan, Nepal, and Bangladesh to participate in the power trading to trade surplus power as well. Gradually, a small portion of this market is also opening up, and IEX is gradually making efforts to capture this market going forward, which is expected to be quite sizable or reach at least 5 to 6 billion units as against the current volumes of about 1 billion units over the next 4 to 5 years. Now, leveraging its expertise and say the technological advantage that it has, the company recently launched India's first gas exchange, which will help in trading in imported LNG in the spot market. Now, opportunities are vast and the impact could be seen in the next 4 to 5 years, thereby supporting growth and also earnings of the company even going forward, particularly without any burden on the balance sheet as well. Now, introduction of the new contracts, the launch of the gas exchange, as well as the geographical diversification have all come together at a time when the street was really worried about the growth and its future plans, especially in the light of the pandemic. Now, these developments have actually added confidence about the execution capability of the management and also have resulted in better earnings outlook going forward as well. Now, during Q1 of FY21, India's power consumption on a year-on-year basis declined by 14%. Fortunately, India's peak power demand returned back to 90% levels seen before the COVID-19 period as well. Now, the stock is currently trading at say 206 rupees per share or 26 times the FY22 estimated earnings. Now, while the valuations are on the higher side, and that is because of the recent run-up that we've already seen in the share price, investors can still, however, keep a close eye and consider adding it on lower levels, as IEX is a good long-term play considering the compelling business model it has, the leadership it has, and the opportunities in the power trading sector.